Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 25th. Michael Boutros here with you this morning. D, Vlad, Kazaa, Pete, Pooj, Ziad, Carlos, good to be with you all this morning. So, as I said in yesterday's piece, a bit of a hangover effect on some of these Euro crosses. A little bit weary of treading upon those, but we will take a look. On the menu for today, my friends, we have the DXY as usual. From last night's update, the Aussie, Kiwi, and Euro Aus. Vlad, I got your request earlier for Euro CAD, so I've added that to the list as well. Euro Dollar and Euro Kiwi from the previous update. And then I just want to touch base on Aussie Yen and Dollar Yen and Sterling. Specifically, Aussie Yen looks very interesting to me. Well-defined range of interest is really kind of taking shape right now. Dollar Yen, I do like it higher. I don't want to chase it from here, but certainly the rebound off the region of key support that we sat at for so long finally seems to be materializing. I don't know if I want to get too aggressive on it, but I am looking higher. British pound taking a pause up here as well. Still looking for a little bit more of a minor setback to get back on the long side there. And then other questions here from Vlad on copper and nat gas. Says no screen. I am so sorry. Probably should have done that first. Guys, can you see the screen now? Sorry about that. Okay, cool. Sorry about that, guys. All right, so we're good up and running. So I trust that you could have that you were hearing the voice, just not seeing the screen. So in any event, let's jump right in. Horace, cheers on that. Thank you for the heads up. On that, Vlad, I got your question. Pete, cheers on that. Horace, again, Pooja, Trevor, I hope everyone's back in the room. Okay, let's jump right in. Here's what the relative performance of the greenback looks like heading into the U.S. session. This is the month-to-date performance. I just wanted to bring this up because yesterday I kind of probed this in the summary update. You know, Euro is actually the top performer on the month. Okay, you're up 2.28%. Sterling's up 2.22%. Swissy's up about a percentage point. Yen also alongside risk up 0.74%. Kiwi, Aussie, CAD, all the COM currencies are down. Interestingly enough, you still have gold prices near the highs. You still have crude prices, which have, substantially come off, obviously, but coming in some near-term support. So we're all over the place, all right? Long and short of it is, the opening ranges materialized, broke late in the month. We're heading into the final days of April trade. So don't be too surprised if you see some of these moves extend into the close. But the long and short of it is, the monthly closes are definitely going to be something we're paying attention to as we head into Friday trade. So relative performance, take a quick snapshot of this if you'd like. Heading into the U.S. trade session for today, here's what the performance looks like versus the dollar. So you're seeing that the dollar is a little bit weaker versus some of its counterparts here. Pound up 0.26%, so is Euro and Swissy. Again, you're seeing weakness in the COM block. Kiwi down 0.76%. We'll go over yen again in a moment. CAD down 0.63. Now, dollar CAD is just a trade that continues to rip through the highs, so we'll touch base on that if we have time. But I'm looking for some exhaustion, and I'm not really getting it, so we'll continue to see if that pans out. Aussie, obviously we highlighted that last night, again down 0.53%. You're heading into Aussie CPI data later tonight, and we will go over those numbers as well. Okay, so before we do, here's what the dollar index looks like. So we started the week looking at the dollar index coming into this key support saying, look, we're there right now. Watch how we close the day, and if we close above or below this 99 threshold, which is basically being defined by the 200-day moving average, slope support off the lows from back here, and the lower median line parallel. So we literally closed right at 99. What was the actual close? 99.04. So what you do with this is indecision. If you look at the near-term chart, it's exactly what you're seeing as well. Really clean weekly opening range taking shape just above support. Now keep in mind that essentially the first couple of hours of the week defined the entire weekly opening range already. We're only heading into Tuesday, but it's something to keep in mind. So a downside break, you're basically risking a huge dump into 98. Well, 98.69 would be a soft target. That's last year's open. But really it would be a move towards those lower targets on the daily chart. You have basic slope support. You're basically like 98.40s, 98.50s. This is the big region down here. 97.67, 97.87, huge region. 50% retracement from the advance off last year's low. 100% extension from the decline off this year's high. Love these confluence pivot zones, huge. So the risk is there. If it breaks to the upside, you still have to contend with 99.50. Like I said, as we noted yesterday, at this point, we can bring down our bearish invalidation down to 99.80 from that 100 spot. As long as we stay below that region, that median line slope, any type of recovery, we'd be looking to fade that strength. But the risk is there if you break the weekly opening range to the upside. So again, a trade that's in indecision right now, look for a break of this really near-term consolidation just above confluence support. Any questions on the dollar index before we move off? Okay. Nice tight range. Look for the break. Aussie dollar, number 2. Here is what Aussie looked like last night. And here's what Aussie looks like now. So, cleaned up the daily chart a little bit. We had a lot of sort of slope analysis here that was kind of getting in the way of things. I just want to take a fresh start on this. So an Aussie dollar objective look just puts us inside this really basic pitchfork formation. Kind of just wanted to bring it back to basics. You have the former highs from January, which were the really nice swing lows for the following month in February. Really nice pivot, really nice pivot. It was the weekly high that we made last week. Also converges on that slope, 76.09. Okay. Key support, the level that we were looking for on the drop earlier in the month and never materialized, 74.55. The 50% retracement, essentially the entire advance, now converges or still highlights the median line. Basics, right? Nothing too fancy. Intraday chart looks like this. Take a couple of parallels off that same slope. Now things are getting interesting because, as I noted in the report, you're starting off the week with some really nice touches of that sliding parallel. So right off the bat, the slope is giving you further confidence. This is another sliding parallel. I don't really stress these, but it just further highlights pivots in price along this, along this gradient. Long and short of it, you're looking for short exposure while below 76. Once again, highlighting 76, which ended up being a 50% retracement of the near-term decline, and again highlighting last week's high on median line resistance. So the setup was bearish sub 76. You need a break sub 75.40, 75.02 initial target, 74.70 initial target, 74.55 is still that key level that we're looking for. Well, here's Aussie now. Looks like you're starting to make the initial move. This is a 240-minute chart. Bring it out to a 120 just to give you a little better near-term price action. Here's the 120 look like last night, or this is the 60. Okay, you did see that downside break taking us through 75.37, 75.42. That's now near-term immediate resistance. Technically, it constitutes a break of the initial weekly opening range, but again, we haven't even opened up the Tuesday session in New York, so might be a little too early to call. Remember, 75 is really what you need to clear to get that move into those southern targets, and these are the ones that we really want to be a little bit more cautious of for a bigger rebound, perhaps in the Aussie, but certainly on a downside move, that's the major level that you need to beat right now is 75. That's not because of the 786 retracement, but just because of this near-term consolidation and to clear out some of those lows. So Aussie looks good. No change to any of the levels from last night. Still looking lower. Heading into tonight's print, obviously you have the CPI numbers from Australia. Here's what this is supposed to look like. So you're expecting a big uptick as far as the month-on-month and year-on-year. The quarter-on-quarter is supposed to come in at 0.6. Year-on-year, 2.2 from 1.5. So if we do start to see this materialize or come in stronger, let's say from 2.2, 2.4 up, you could see a larger rebound in Aussie. Now, in my mind, as long as we stay below the weekly open, I think it would still offer an opportunity on a stretch higher to try to fade it again. If it clears 76, sayonara. I want no part of it. I think at that point you're looking at a much larger scale Aussie rebound. So the game plan is set. 76.11 is sort of our threshold, line in the sand. Immediate rallies or spikes into the weekly open, still looking for fading opportunities. A break below 75 is really what's needed to get these downside targets in play. Okay, so keep your eye on that data that comes out later today from Australia, 21:30 here in New York. Now, it's going to be interesting to see if they caveat this, if it does come out stronger with what's going on in some of the energy prices and other commodities. But largely speaking, I think the risk is to the upside if it beats. A weaker than expected print, if we're holding shorts already or if we're already in position from last night, you just want to be bringing your stops down, trying to see if we can't get that break sub 75. All right, that is Aussie. A little bit longer than I wanted to spend on it, but with upcoming data, certainly it's going to be what's on the main menu. From a data standpoint, by the way, guys, the biggest print also on all the dollar crosses is still going to be later in the week here from the United States. You do get durable goods on tap on Thursday, but the big print is going to be the first quarter advanced release of GDP. Okay, we're expecting a 1% print. Obviously, it was a pretty decent read on the fourth quarter at 2.1, but this is going to be the big heavy driver. And all the talk that you've been seeing circulating in all the headlines this week about what this implication means as we kick off sort of the first gauge of 2017 growth, that'll hit the wires on Friday. So keep that on tap. Okay. Moving right along. Kiwi dollar, number 3. Here's Kiwi, and here's what it looked like yesterday. Another one that panned out pretty decent. Look, we were looking, if you guys recall last week, we were looking for a rally into 70, 75, 70, 90 for a nice short position. I left that marker up there. That's been there for weeks now. And we ultimately wanted to get short on that stretch. We got the release, as I had noted, of New Zealand CPI, back last week. It was a strong read. You saw a lot of Kiwi pairs rip through some resistance levels and i.e. support levels, but Kiwi dollar couldn't do it. Okay, and it actually approached the highs and turned lower. And then, that's when we started to doubt. We started to doubt whether we're actually going to get that push. That being said, this weekly opening range took shape just below 70.41, which of course 70.41 is denoted by the March high day close. Okay, so you're right below the high day close. You're trying to get through. You can't get it. And the weekly opening range is taking shape just below that region. So essentially, you're basically just looking for that break to give you justification to get on the short side. It was either a rally into 70, 75, 70, 90, or a break of the weekly opening range to the downside. Well, we got a break of the weekly opening range and the monthly open. Here's where it gets interesting, because the daily chart puts us at key support. The intraday chart also puts us just below near-term upslope support, so this should be resistance. And now right into the U.S. session, this is what you want to look for. If we break back higher, I'd be interested in fading a rally back towards that same key level of support that we were looking for earlier. 69.90, 69 handle, 70 handle, just ahead of it. If we break lower, you're right on tack to continue to favor those downside moves into 69.12. I really don't think you're going to get too hung up until you get back into that key support that we were looking for, again, back in March, that the market turned just pips from, which is the yearly opening range lows and the December lows, all of which converge on the 50% retracement. 68.60, like so critical. into 68.85. So that's sort of where my head's at least for now, near term, on Kiwi dollar. Here's a 240-minute chart. There's also a basic trendline support that you have here. I didn't want to really kind of clutter it up because there's too many parallels here, but that also converges just below that 69.12 target. So I don't want to throw too many levels on there for you, but here's a zoomed out view. Here's a zoomed out view. Near-term bearish invalidation. We're going to go ahead and bring that down to those swing highs. 70.41 is now the major key bearish invalidation for the near-term bias. Again, the March high day close, but it now also converges, on basic trendline resistance and the highs for the week. So call it 70.44, 70.41 is now the near-term bearish invalidation. If we settle below this, go ahead and drop this pitchfork and just continue to focus on the downside targets. Keep your charts clean. But Kiwi does look pretty good. Immediately from here, heading to the U.S. session, I'd be looking to see what this upside slope gives us. If it gives us a break higher from here, from this candle we just made, literally, look for a stretch possibly into 69.90, the 70 handle on a spike to fade. But still like it lower. Number 3, Kiwi. Questions on Kiwi dollar. Finally getting some play on that one. Last but not least, Euro Oz, another setup that we looked at yesterday. Also put this on Daily FX. Haven't really played with it myself. I kind of am waiting for the right trigger, but I just kind of wanted to put it out there because I think you're coming into a near-term exhaustion point. I think Jamie highlighted this as well this week. Look, this is the slope I'm looking at. This is just basic. It's a messy pair, but the break, obviously, we talked about earlier in the month, and you can see the previous update there, guys. The link is provided for you. Here's that basic trendline slope. Again, that same parallel taken off there. Last year's high, December high, touched it again in March. There's the break, test of support. So we're playing the breakout. Our broader bias is still to the upside. What we're looking for is possible near-term exhaustion, and the reason is because you're coming into some near-term upslope, which has offered some pivots already. If you take this median line formation off the lows, I know it's a little bit messy. We broke here support, but if you take that same slope, it literally caught the highs that we made back in March. So that would define, maybe another move into like 45.40, 45.50. Where it'd be a nice area to start looking for some exhaustion. But the initial area I was looking for was 44.30. We're above that now. So I still think you want to be cautious about trying to fade this at any type of point. But I'm still on the lookout for exhaustion, just like we've seen previous tags of this slope before. This constituted a 100% extension of the advance. So I kind of figured to be 2 equal legs up would be a nice area to get some kickback. The kickback was on the gap. So obviously if you were quick-fingered on the Sunday open, it was a hard trade to get into, but here we are trying to make another high. So at this point, here's what the intraday chart looks like. Levels of interest. The 786 retracement gives you 44.85. We're just pips away from where you are from that right now. Again, there's 44 or 45.40, 45.50. If we get that, might be a good area as well. There's that slope. Immediate support's back at 44.30, what we talked about yesterday's update. So if we break back below that, maybe another test of that is resistance, stop against the highs, you'd start to play the pullback at that point, looking for that 43 handle. But at this point, you're in no man's land. So for Euro Oz, guys, put it on the shelf, on the radar for now. You're looking for a stretch higher in your 45.40, 45.50, or a breakback below 44.30 and a test of resistance to try to play the short into the handle, or the figure there at 43. 43 is pretty big, not just because of the highs that we made here, but it's also the 618 retracement of the range that we're still in. So we're still respecting these fib levels here, as you can see. All right, so we'll bring this up 143, near-term bullish invalidation. It's also going to constitute and necessitate a break of the weekly opening range low if it breaks below that. But the broader picture still remains constructive. Questions on Euro Aus? That is number 4. Another one that you might want to watch for tonight's release. So again, CPI numbers, especially in the event of a knee-jerk reaction, okay, where you get, for example, Aussie weakness and then it rallies. That would give you a nice move higher in Euro Aus, and then if Aussie starts to rally, you start to look for the pullback. So that would be maybe the spike that we were looking for into that upper parallel before the move lower. Okay, but you know the reaction levels we're looking for, guys. 143 or a breach into that upper parallel. Those are the key levels you want to focus on. All right, moving right along. The previous night's update. From Sunday, we were looking at the euro. Again, like I said, it's a bit of a hangover effect, so I don't really want to stress. Here's Euro Aus from last night, by the way, guys, so no change to any of those levels. We're now trading above 143. Looking for that test of 144.85. So, euro. Here's what euro dollar looked like to open up the week. Obviously, huge gap above the high day close, pulled right back into the 200-day moving average. We're all wondering what the heck is going on. Well, 108.20 is still the support structure that you needed to focus on, because that's not only the 50% retracement. You had the median line slope there, the 200-day moving average, which is just above that level. Here's what euro looks like now. Here's the daily chart. That's exactly where we found support, and it's exactly what we've been sitting on ever since. 108.20 was the actual swing low, came right into that region. We settled and closed the session well above that confluence support. So right off the bat, my hands are tied behind my back. I can't get all excited on a short exposure by any means. You came into key support after gapping higher, and you rebounded. You closed well off support, right? Some 40 pips higher. So you have to respect those kinds of developments. So automatically you're coming into today's session looking for a move higher. That's cool. How much higher? I don't know. I'm looking for some near-term exhaustion. I don't buy that we just go straight to the roof from here. So I'm with Jamie on this one. He's still got the entry a little bit lower on a pending trade for the euro dollar. I love it. If we get a pullback into those regions, I'm still on board. No problems. Okay, and that level would be right around this region here for me, 107.70. 107.77, excuse me, the former swing highs from last week. Again, the median line comes into that region. But in time, we started to shift it over a little bit. So here's what it looks like now. Okay, so we'll bring it to 120 just to show you a little bit more closer price action. I know this chart hopefully is not too messy for you guys at home. But here's what it looks like in comparison with where we were earlier in the week. Okay, so we came right back into this pivot point. We rebounded right off it, and we're just making a round trip, trying to see if we can't come right back into the weekly opening level here, your 109.20. So you basically have a 100 pip range to play with, 109.20 into 108.20. That's what we're looking for the break. Yeah, I can't say there's any change actually. The same levels. Still going to be our near-term bullish invalidation level. Topside resistance targets. This was a target that we were looking for back here. The 618 at 109.36 still holds, but this 618 at 109.30, I wouldn't really stress too much. That was the target for this advance. So I'm going to just leave it there for now, but topside targets do remain unchanged. Again, feel free to take a snapshot of any of these charts, guys, if you need it for future reference. I mean, the potential for euro is really, you're looking at like 110.58, 109.90. And that just puts us within the realm of this, real clean slope. Here's the 4-hour. Just put things back in perspective, guys. Basics, basics, basics. You're seeing the market react and give us some clear-cut, definitive, or I would say definitive in my humble opinion, reaction to technical levels. Here's the slope, support, break, a little bit messy, but we check it as resistance, slam lower. Check it as resistance, slam lower. Break it, okay, great. Looking for their support there. Dribbled a little bit lower, but here we are. Now we're finding support. I'm going to make up a new word every day, guys, and make up a Boutros isms. Support, here's the median line. It came right into it as support, also a fib level, previous pivot, and move right off. I mean, this is just as clean as it gets. So we want to kind of see if we can get through 109.36. That would be the next upside target. Broader trade, in my humble opinion. Again, we'll stay constructive above 107.77. And as soon as we make some sort of topping pattern, if we were to break 108.20, we're going to scratch this retracement and tack on a quick retracement off the highs to get a little bit more an update of the operative downside fib levels. Okay, so just keep that in mind. Questions on euro dollar? Oh, Pete says Julo from yesterday, right? There's a new word every day. All right, so that's euro dollar number 5. Vlad, this one's for you, man. Let's do euro CAD while we're on the euro updates. So here's what euro CAD looked like previous in the week. It had gapped into a big resistance region right at 140. 147.09. That was a 618 retracement. You had the upper parallel, huge region, right? So if 147 was going to break, you'd look for that topside stretch to continue favoring the long side. It just so happens that we gapped into it. We pulled right into support, Vlad, excuse me, and then we rebounded right through. Here's, let me just give you a little bit broader of a picture. Here's what the daily chart looks like. Now, if you remember from Sunday's update, I had 2 euro trades on here. One of them was euro CAD and one of them was euro key. I actually favored euro key, and I told you that this was the one that I was kind of a little bit more favoring in the event of a euro breakout, which is not really necessarily what happened because euro held against some of its other major counterparts. But it still was my favorite pair as far as trying to play a euro cross into resistance. Both of them worked out to the upside on the break. I just was still favoring CAD strength. I'm still trying to play the dollar CAD to the downside or just CAD strength. I'm not in anything right now, but it's something that's kind of nagging me. And I feel like just as I give up is when the market will turn. So I'm kind of straying away from CAD crosses as it were just right now, but I still think that one is going to be something you want to keep in mind. Euro CAD here on the breakout as far as the update, on this one, Pete, or this one's for Vlad, I'm sorry, it's all about today's close, right? It's the first attempted break above that 147.09 level of resistance that we talked about. The first soft target I had added here, I was looking at this earlier, was the reversal day close, the high day reversal close from back in September. We sailed through it a couple times, but they've both been decent pivots, and it was previously close highs as well. We've even moved through that, so I'm gonna ditch that as well. I really don't have anything on tap until the May high, which we're checking right now. Is that correct? Yep. Which is 148.25. We just tagged that. 148.67 would complete a 100% extension off the low. Okay, actually, let me add that here. And then 149.28 would be a basic 764 off the highs from back in November. So here, if you need to take a snapshot to update this, Vlad, here's the daily. And then I'll get you the intraday in just a moment. A beautiful trade as far as the broader implications and how clean the technicals are. I mean, we talked about the trend line off the 2014 or 15 lows, excuse me, right here. Boom, boom. We talked about that for a while. And on the way up, perfect resistance. This gap comes above it, tags it as support, and moves off. It's pretty constructive. It's pretty constructive. So near-term support's back at 147, and it's 100 pips away from where we are right now. But that's still going to be near-term support. Bullish invalidation for the broader trade. is 45.30, okay, this region. Top side targets, like I said, 49.45, 50.21 would be a longer term target. That's last year's open. On the intraday, Vlad, here's what it looks like. For some near-term targets. Look for some immediate pullback. Again, possible exhaustion here, but you want to stay constructive while above 47. 45.30, like I said, now would also would necessitate a break of the weekly low. So it's a good spot to put the broader bullish invalidation level. All right, you're seeing some divergence in momentum. It's cross-week divergence on a gap, so I don't really want to stress it, but it is there nonetheless. So if you're not already long on this trade, guys, it's not something to get involved in trying to chase. All right, now the other one, this is number 6. Vlad, let me know if you have any other questions on that. Does that help? The other one is Euro Key. And that was the favorite trade on the, like I said, on the Euro strength story. Here's what Euro Key looks like now. Here's what Euro Key looked like earlier in the week. So be careful on that, Vlad. I'm not sure where your stop is on it, but just use some caution. Here's Euro Key, okay? Same thing. So Euro Key was even more cleanly defined in that you also had slope there as well. Right around that 154.84 level, huge regions, 236 retracement, basic fib, no one cares. But it's also the yearly high. So you have that high from last month that we marked right into that region. Also, the median line coming off the lows right into that region, okay? So into, again, the open of the week, the weekly opening range is taking shape below a critical resistance confluence. We like Kiwi weakness. It was a little bit more of my favorite trade as far as the breakout trade. And the top side pop, you're looking for a rally into 156.82. This is a longer term target. I didn't think you're going to get this on a one-day stretch, but here we are. We're just shy of it. So if you're holding longs, guys, see if we can't get one more stretch into the U.S. Open session, but I wouldn't get too aggressive on trying to get an intraday stretch into that region. Here's what the intraday chart looks like, or here's what it looked like earlier in the week. You gapped right into that 236. We were looking for the pullback to remain constructive above 53.35, was it? And then we had this consolidation break we were looking at last week. Looking for that stretch now into 56.80.82. So we already took out 55.81 on the stretch. Here's what it looks like now. So you see what I mean? Momentum looks a little bit tired. You're still in overbought territory. So if you're holding longs, I would be bringing my stops up. Still would have my target at 156.82. But if you're looking for new entries on the long side, not necessarily a good area to try to reposition. At this point, I'm looking to phase out more so than get new exposure. If you leave a little on, again, the October high, next topside target, 57.64. And then you have that median line, which I pay a little bit more attention to right here. Longer term slope level. Don't forget the daily chart, guys. All of these slope lines are derived from this basic trendline resistance. And that's up into the 158s. So pretty clean. Pretty clean. Euro Key. Kind of a sleeper cell. No one really talks about Euro Key as often, but when the setup's there, the setup's there. Questions on Euro Key? You're pretty light on Kiwi data, so it's all about the Euro. Keep in mind we got the ECB on tap on Thursday, so we will be taking another look at these Euro crosses on Thursday morning. Quick housekeeping update, guys. There won't be a webinar tomorrow morning. I will be out. So we will be coming back on Thursday with the intraday strategy webinar on Thursday at 8:30 Eastern. Still tomorrow we'll have the midweek strategy webinar with Jamie. No change to that. All right. So A quick runaround. I see questions on copper and nat gas. I will get both of those. A quick runaround. I just want to touch base on the yen crosses because it is becoming more pertinent as you're seeing continued strength in what's going on with the equity board. I mean, geez, there's nothing that's going to slow us down. Okay, it looks like futures are up pretty sharply still in the U.S. You got about 153 points on the Dow. Yesterday we closed up 216 points higher. It was a 1% gain on the Dow. S&P, same gig, about 1.08% on the session. So it's a pretty strong rally. Here's what you want to look for. Aussie yen is a trade that we've been talking about. Pooja, are you in the room? You are. I know that we were following this trade. Look at where we turned. I'm just going to leave this on the board for a while and just let this sink in. Just absorb this chart for a couple of minutes. It's such a huge region. Basic trendline support. I mean, this chart is one of the most technically driven charts in my humble opinion because it's not just based on basic slope, but it's also on this pitch. So boom, boom, boom. Guess what? That slope is the same, a parallel, that caught the exact stretches for the June Brexit drop. And then again, this drop that we made on the elections. Well, that converged on the 50% retracement down at 81.36. We didn't quite get as low as 81.36. The low actually came in at 81.48. Grant me 12 pips. It's Aussie yen. And then we made a nice reversal date back above the 200-day moving average. And here we are with the move higher back above downslope median line support. So what does that mean? Well, this could go one of two ways, obviously. But the scenario I would like to see is another fake out lower, and then this thing just rips. And that would coincide with risk moving higher as well. Here's what the intraday chart looks like. We kind of moved up, failed right ahead of this median line. I don't really want to stress this so much, but continues to highlight near-term support at 82.97. And there's that 82.12 level, the September low, which is a level I think if you were to get a spike into might be a decent rip. Now keep in mind, I'm not looking to play the short. I'd rather use a little bit more of a larger pullback to get back on the long side on this one. Or if we break through, okay, the weekly open, if we break through the upper parallel, I'd be looking for the setback to get back on the long side and play the breakout of this formation. But it's something I did want to highlight because the daily chart, it's just ridiculous. I mean, you know, obviously I wasn't going to be as gutsy as to take a long right here on Friday, but it's a huge area. It's something we should have been paying a little more attention to, you know, huge area. In fact, when's the last time? By the way, the search function has been fully activated and fixed up since a couple weeks ago, guys. So keep in mind, you can always search your favorite currencies or assets really quick. Here's what Aussie yen update looked like. This was the last one that we looked at back on the 11th. 81.36, turned just ahead of it. So now that 82.97 level that we had just broken as support back here on the 11th, that's now near-term support again. Boom. So let's see if we can't get this stretch to the upper parallel, and that would be the breakout play. But you're coming off a huge region. Okay? Questions on Aussie yen? Well-defined range of interest. Watch for a break of this near-term consolidation. Dollar yen. This is number 9. Here's what dollar yen looks like. Okay, so if things were to close at these levels right now, it would constitute an outside day reversal candle. Now, obviously, it's way too early. We haven't even opened up the U.S. session, but just to put that out there, outside day reversal candles matter when they happen at the extremes, especially when it's an outside reversal candle to the downside at resistance or an outside day reversal candle to the upside at support. We're neither here nor there right now, so this means nothing to me except for the fact of actually more conviction in the markets. So I'm actually still favoring the upside As a lot of people will use this as, hey, are you looking for exhaustion or something because it's on the rally to the upside? Not necessarily. The fact that we gapped, tried to fill the gap, now took out the gap range high. Typically when the market's gap, guys, I use that in and of itself as an opening range. Wherever the market gapped from, that would be the opening range that we would clear, period. And that's what would focus our focus to the upside. So the fact that we moved right into support, tried to fill it, failed, broke higher, puts me on the long side still. And the levels remain unchanged since, I don't even know. We've been looking at these same levels, 111.10, I'm sick of saying them, 111.45. Huge resistance, major pivot in price. Now it converges on some parallel slope. That's the level to beat. If we clear 111.45 to the upside, I think you see 112.20, I think you see 113. Then we look for a little bit more of a stringent resistance up here where the 100-day moving average converges on slope, just above the 113 handle. But that would constitute a break of the monthly opening range. So, I don't know if we get there as we close out the end of the month. We never got a real decent break. We did get a break here on the 11th. That shifted the focus to the downside. You're right back through that opening range low now. Again, near term, the focus does shift higher. Momentum, constructive. Looking for that stretch into 111.10, 111.45, near-term resistance. Keeping in mind 111.45 is still also the monthly open, guys. So after all this commotion and all this fiasco and all this risk shift this way and that, dollar yen is going to be unchanged for the month if we continue to move into that 111.45 level. That's why we call it the abomination, my friends. Welcome. Any questions on dollar yen? Last but not least, and then we'll jump into some of the commodities here for you, Vlad, to wrap things up, is sterling. Still going to be in focus, obviously, on the back of last week's move. I just wanted to highlight the daily chart is crystal clean, highlighting that major resistance level that we've been talking about, 128.54, 128.28, still major level of resistance, 100% extension off the low, 618 retracement off the high. My favorite fib confluences, okay, my favorite fib confluences. And here it is, in play. Nothing's better than seeing, your practice, the market respect your discipline. So here it is, continuing to hold below this region. You're seeing some consolidation. Long side is still favored, while above 126.75. And topside targets are unchanged. So as far as the broader picture, I don't really have anything to add as the daily chart. I just wanted to show just wanted to give you an update that we're still consolidating below this region. Everything remains unchanged. A break higher, looking for a basic tag of this slope, which defined the January, February highs. And then key resistance, confluence resistance up into 131.21, this region right here. What else can I say? Broader bullish invalidation you can bring up to the 200-day moving average, which is also going to be just above last month's high. So this is going to be your broader bullish invalidation, meaning if we break below this region, you just want to be straight bearish. That's just like straight failure. But this would be an area of interest for long entries for continuation higher. Key resistance. All right, so quick update there on the sterling levels. Good long entry points. Pete, which pair are you asking with regards to that question? Was that on sterling? On dollar yen. Okay, I'll come back to dollar yen in just a moment. Before I do, here's the intraday on sterling. Again, no change to any of the levels. There's that high. You can keep that as our near-term bullish invalidation. Topside targets unchanged. From a trading standpoint, I think the consolidation kind of gives you a rip, and then you look to fade that onto the upside. Because even if this consolidation breaks higher, I'd be weary until we get through 29.26. It's the pound, guys. It's the head fake of the century. I mean, this is what it loves to do. So just be cautious if you're not holding longs already on trying to chase at the weekly high, which is basically what you're doing right now. So that's sterling. To go back to your question, Pete, as far as dollar yen, possible entries for the long side, huh? Dollar yen, dollar yen. So if you're not already holding long positions, let's see what this looks like intraday. So on a move like this, I couldn't tell you where I'd want to get long until we would make a peak, okay? So this is basically how I would do it. And this is how I actually do my entries. So anyway, once I have a high in place, if we get a pullback, a turnaround, momentum gets back below 70, I see some sort of peak where I can take some sort of near-term retracement off the high, off the low rather, then I'll look to where I have some convergence on any of the slope lines that I just drew out, either a basic 236, preferably a 38.2, and that's where I'd start to look for initial support. So on this trade, it'd be like here. Now, it just so happens that also happens to be some nice former swing lows. So that's a level that I would watch. That's 110.08. Don't really want to stress this 38.2 at this point. That's just a decent pivot in price, nothing major. So that's what I'd be looking for. Something like this. Initial support here. If that breaks down, you basically don't want to challenge. You want to look to see if the opening range low for the week holds. So I wouldn't necessarily want to get into a long at 109.75. If we get a reaction there, great. I'd be looking for a break back above 110. But this is sort of the pivot that I'd be focused on right now as far as a pullback in dollar yen and try to get long. Keep in mind, the upside target's very clean. I mean, I can't believe I'm saying that about dollar yen, but it's true. It's still all about 111.10, 111.45. It's just, for me, it's always been about that level. It's going to continue to be about that region. So keep that in mind. Pete, does that help? Dollar yen? Sterling. Okay, Vlad, to cover cheers, Pete. To cover the copper and nat gas. Yeah, copper. I think we've been tracking that pretty well, right? Copper. Here's what the intraday chart looks like. I don't think I checked out this week. So give me one sec here, Vlad. I'm not sure if we talked about this yesterday in the webinar, but okay, that's the weekly open. Let's clean this up a bit. Let me clean that up. That's done. The 88.6, catch that? Wow, to the pip. All right, we'll leave that on there. Okay, so made a nice little turn here at the 88.6 retracement. That's off the advance that you made from the lows in December of last year. I don't, know how. Actually, it's a pretty decent slope. Let's give me one sec. Let me also just tack on this real quick. Eh. Okay, so this is what I'd be looking at with the copper chart. Let's just start off with the daily chart real quick. So on the broader scale of things, the one thing that we did talk about with copper and the larger theme was the stretch into 272, right, last year. That was a large scale consolidation break. It was a measured move, if you guys remember, of the rally just from the lows that you made in January of last year to March. So it was a really well-defined consolidation break, measured move. That's where it capped out. We went to this year capping out at some further longer-term slopes. These are all derived off of just the low. So within this consolidation, this triangle wedge formation, if you just take the lower slope, that has also been defining the advance. Support, support, resistance, support, support. We just bobbled off it right now. So the question that sort of the focus for me right now is the gauge of the reversal or the rebound off this region. Is it going to be still just another move into this parallel and then we see another leg lower? Or is this the end, sort of where we want to play the larger scale range? And if we see a topside break here, so says our discipline, we look to play the rebound into the upper parallels, just like we did here, just like it tagged here. So the game plan is there. On the near term, the focus is on this rebound here, right? How high does this stretch out before we have definitive move on whether this rebound is going to go for the upper parallel or whether you're going to see another leg lower first. So here's what the intraday chart looks like. Again, that's when you go back to the intraday. And for me, focus right now, here's the weekly open. You came to initial resistance, that's 258, 259. I need to see a break above 262 near term. This to get bullish again. Key support just so happens still remains at that low now, and it converges even more so now on slope. 250, 249. So you could see a scenario where it moves into this resistance, makes one final low or one final stab into maybe the 100% extension. Both of these levels, areas of interest for possible exhaustion, and based on time, Vlad, they'll be converging again on these lower parallels. Excuse me, on these lower parallels here. So I don't really want to get too aggressive on the long side unless, like I say, I see it close above 262 or a drop into this zone, 200-day moving average, the 100-day moving or the 100% extension, 200-day moving average. Both of these zones would be areas of interest for me for long exposure. All right, so here's the daily chart. If you want to take a picture of this real quick. And the intraday. All right, Vlad, let me know if that helps. Last but not least is a question on nat gas, which we briefly looked at yesterday. Okay, looks like we're turning lower still. Is this the same chart? Yeah. I thought I'd updated with you guys this in the webinar, but we can always redo it. Bear with me one moment. Near-term support coming right up here at 3 handle. Okay, so I'd highlight that entire region, to be honest with you, right here. Three-way convergence, 100% extension off the high, near-term channel support. Haven't really gotten too many tags on that, so I wouldn't really stress it, but it also converges on the 38.2 retracement, so kind of a big near-term confluence region. Oh, you also have the 200-day moving average. Add that. Big region of support, okay? Right into the three handle. Vlad. So I definitely would take a quick and hard look at that. If you're holding short exposure, a really good area to start taking off some of those shorts are into the three handle. I wouldn't even wait till 302 is where it starts to get hairy with the 100% extension of the decline off the highs, but definitely a big area. Now, not necessarily calling the low here, Vlad, but certainly if you see a dip below 3 or if it breaks below 3, you have larger implications for a drop towards that lower parallel. And again, the longer term picture here has been pretty clean. All of these slopes, again, derived from just the low that you made in 2016, the March low, and specifically the low you made in November. Kind of sailed through it, but that same slope has already defined resistance, support, support, resistance, pivot, resistance, and to continue to look at that. And that's basically the next target down if you break below that 200. So that would take you into this region here. Big support near term. Immediate resistance, I'd look back at the monthly open, which has been a very decent pivot in price over the last, month. And obviously, scratch that 236. Yeah. The 50% retracement is important. 319, near-term resistance, and that would be near-term bearish invalidation. Why? Well, it's not only the 50% retracement of the entire decline from last year's high, it is also the reversal day close here that we made back on the 7th of the month. So you can see that that offered some resistance on the rally here, 38, and it's a 50% retracement. That's what's going to be our near-term bearish invalidation level. Also keep in mind that would necessitate a topside break of this descending channel. All right, larger picture is constructive. I still think you may risk another low here, but I'd be looking for initial support into the 3 handle on nat gas. Vlad, does that help? He says, got it, thanks, very brave now. Cheers, Vlad. I would want to say confident more so than brave, right? But cheers on that. Glad I could help. All right, guys, if there are no other questions, I'm going to go ahead and wrap it up here. I do have a couple of minutes left if you have anything. Look at gold, please, too, says Pooja. Yeah, sure. So gold, hopefully this thing will start to kick up and revamp into some volatility here. Here's what I'm looking at. I still think you got more on the pullback. The 200 DMA has moved. It was at 1255. Now it's basically 1254. 1254.40, like that. Pretty close to the high day close from back here in February. But let me spend some time with this. I don't really see a reason for gold to start rallying per se. Especially, markets are ripping higher. Dollar's coming into some support. We talked about that. I want to see what the dollar does around this 99 handle. 236 is going to hit right on it. Woo! Right there. Okay. So there's a lot of confluence there. All right, look, 1253, 1252, that's kind of defining moment. I don't like that it's coming right up basically over the next like day and a half. You'd need to see it, but that's sort of the major key support here. Now the monthly open comes just lower. So this is the area to focus on for gold. I do think you're vulnerable while below 1278, 1280. That's a level that we've been talking about for a while. Kind of didn't believe the breakout as it was pushing through. But here we are, you know, back below it again. So that's still going to be a level I'll focus on. Although, again, we haven't gotten too clean definitive price action on it, but it's been there as a pivot. So that's resistance, that's support, that's bullish invalidation for the broader uptrend in gold. I think, you know, from a trading standpoint, you possibly get a little bit of a rebound before you slam lower, but I'd want to see more stringent support into this zone if gold is going to continue higher. Which on the broader picture, I still like the upside of gold longer term. It's just whether this pullback here develops into a full-scale correction or whether it's just a near-term pullback. That's what we're trying to gauge. And I think the sort of first test of that would be this 1252, 1253 region. Pooja, does that help? Does that make sense? All right. Cheers. Okay, so like I said, we'll wrap it up there, guys. Again, no webinar tomorrow morning. We'll be back on Wednesday morning. Jamie's midweek strategy webinar unchanged tomorrow at 12 o'clock. Keep your eyes tonight on the Aussie CPI data. I'll try to tweet that out as it comes out. We're expecting a pretty strong print as it is. So again, the risk is on an even stronger print with the Aussie on the weak side here, or on a weaker than expected print if it completely misses a full-on scale breakdown. You know the targets and everything is pretty well mapped out as far as the Aussie dollar is concerned. We'll keep you updated on SB Squawk. Thank you so much, Pooja. Cheers. Trevor, I appreciate that and all your comments. We'll see you all on Thursday morning.